This is Scott Varilek, Varilek Trading in Sioux Center, Iowa. Cattle market's a little rough last week, pretty much a straight down. That's one of the worst weeks we've probably had in the history of trading cattle futures, as much as they broke in 1 week. So a little recovery to start the week. The futures did trade a little better. We had some recovery, only to be followed by a big down on Thursday here. Cattle and feed report Friday. That's what we're gearing up for. The last month's report was a little bit negative, and that just hung over top of the market and made everybody a little scared, because that tight supply is the story we rallied on. And when you start to take some of that away, everybody was trying to get out the same door fast, and probably too fast. Some of the fundamentals didn't line up to be that bearish, in my opinion, but that's how the market traded, and we still have quite a bit of nerves out there with the triple-digit breaks that we're having again. And this next cattle on feed report, everybody's a little bit scared of it, trying to get out of the way ahead of it. We've got some bearish estimates penciled into this, so we're looking at 106 placed, 101 to 102 on feed, 96 to 98 marketed. So those are some negative numbers. Now the good news is that we're penciling those in already. That's been part of the break that we've had, hoping that the report can kind of not be as negative as the last one. And if it's not, if we just come in with the estimates, maybe we've broke enough already here. So cash trade's been okay. There's been some around anyway, anywhere from 178 to 182. It was a little 175 puking last week towards the end of the week, when everybody was pretty scared, but we were able to get a few dollars back on top of that. And we still have cattle getting shipped from the north to the south, from Iowa all the way to Texas. So packers are still trying to get numbers around them. What can happen with cheap corn and diving prices? We can put some more weight on the cattle. So that's what we're going to have to watch for, to see if these carcass weights are going to start jumping now, as we're going to fight the market, try to feed them longer. But we do have cattle that we're selling here. Even if we're selling them for 175 to 182, they probably make some money at these prices yet. So there's still a little bit of that attitude to maybe to keep them moving, sell ahead. Demand's been good. I mean, it's just tried and true all the way through COVID, and for the last 3 years has been excellent. It still looks like it's holding. Consumer still wants high quality beef, and that demand is there. So I ultimately think that this high run of feeders that we're having earlier in this fall, as guys try to move them early, trying to cash in on some of these high prices, that these numbers are going to dry up when we kind of get to the end of the fourth quarter. I think we're going to turn the page into the first quarter and start to realize the numbers aren't coming, because we've already moved a lot of them. So that's my hopes for the recovery of the market. But right now, we still got to get through some of these, this tomorrow's report, and some of this downward spiral on some of these futures. So questions, call us, Varilek in Sioux Center. The risk of loss in trading futures and or options is substantial.